something that is quite interesting. Also, still looking for solar to break up and out, because if that does happen, we have seen what looks like some accumulation occurring at this stage. All right, let's talk options and unusual activity. There were a couple of big ones. AMD's got to be the big one here. 9.9% up on the session. Pretty glorious for AMD buyers. Huge amounts of calls coming through. It was a serious day for AMD. They did very, very well. We also saw some other companies here showing some pretty big ones. 3.22 times average volume for Google, which was interesting. 509,000 calls. And look at the SPY, 4 million puts versus 2.8. So when we scroll down, you can see calls still outweighing across all the legs. Actually a fairly low options day coming into non-farms. Expect Friday to be a lot more. And retail made up 27% of the single trade leg. So that's actually quite high across the board. Let's move into now what we've got going on with our yields and everything to with the lead indicators and the big levels. First up, effective yield was down. It's kind of bullish for markets at this point. Equal weight market still hovering around that resistance point. Again, not really negative on the market, something that we're looking there. We've got bond indicators still fairly bullish, going to new highs. Okay, that's pretty strong. We've got the American consumer, often considered consumer discretionary versus staples, again making new highs. Not exactly a weakness in the market, is it? And then we've got the US 10-year. Now, this is one I'm going to be watching. 10, 2, these types of things. We've kind of speculated somewhere around here could be where we start to see some buying back into the US 10-year. Maybe the markets have oversold a little bit too much at this stage. We've been going down a series of lower highs and lower lows. We haven't seen any turnaround. We're, of course, going to set some alerts above these areas, set alerts above 4.2. If we do start to see US 10-year rise up, then that's probably going to push the markets down. So I think watching yields will be important over the next 24 hours. Put call ratio sitting in the middle, still a decent amount of calls out there over the puts. So that's been stacking as we've kind of built around this coiling range. Dow Jones Transportation Average still holding firm, and home builders actually putting in a pretty good session. So we'll set an alert for a new high. We already reported on home builders pushing forward, which was already a strong sign for rotation. And so far, so good for that. But yeah, we're watching. We're going to see if something does change. What about everything to do with central bank liquidity lines? They have held firm. There's no massive selling. They're just kind of coiling like the market at this stage. So we don't have any bullish or bearish signs coming in from central bank liquidity, but we are watching. Copper signs, bit of recovery here, something to be watching over the next 24 hours. If copper kind of bounces up here and then starts to sell off and makes a new low, I'm a bit worried about copper. So we'll be watching this one quite closely, because if copper starts to fall through, that's often considered Dr. Copper and something of importance. We did see the dollar reject that huge supply line again coming into the non-farm payrolls. An interesting one, because I could see like the market trying to spike a 104 and then maybe even try to short that zone again during non-farm payrolls. This could be a good one to watch, and even the euro and the pound versus the US dollar may be some of the best trades coming into non-farm payrolls if you are looking for the trap. Remember, sometimes the markets will go off in one direction, then they'll reverse. And generally, you're looking for that chess play. You're looking for the markets to go off in one direction, grab liquidity, and then come back. And it's something I teach, and I trade often in my day trading masterclass kind of setups. Links in the description if you're interested. But that's something that we talk about a lot. And the reason why is because it's actually quite a replicable way of trading the news. You don't trade before, you trade after you see. Remember, it's patience, react, don't predict. And that's kind of what you're doing here. Gold traders will be looking for a break of this little line here, which we've got an alert at, which is 2041. If that happens, we could see a little bit of uptick, maybe 2075, then possibly sell off. Do remember at this stage, we're starting to see a build of a buy position after what has been a very big sell-off. And that buy position has been from retail. So yeah, I'm not loving gold as much as I was. Now, here's where things get a little bit interesting. So let's take a look at oil. So it kind of did what we wanted. It made a new low. Cool. That's pretty cool. Then it started to rally. And of course, we've got an alert here at 70.42, which is above these week highs. Now, if that happens, we could be kind of looking at a short-term recovery back to 72 a barrel, back to that drop-base drop kind of scenario. So yeah, I like where I'm looking at oil, and it is at that kind of point. Now, you might say, but Tom, it's 89% bought by retail. Yeah, but it's been like that for a while. So I wouldn't be surprised if my number is slightly out of date and that people got liquidated over the last 24 hours. Again, non-farm payrolls will move this one, and it could be very, very interesting on the charts. Let's move over to Tesla. It remains coiled. We're looking at how this weekly closes. Again, we break either of these zones. We're out of the coil. We expect a big move to occur. We'll update on the weekend video for that. Semiconductors has been weak, had a bit of recovery. We'll talk Qs to get that one. And of course, nice to see biotech having a good session again. So biotech coming through 0.71. It's just something we've been following. Of course, semis did better, but bio's done better over the last couple of days if you take every day into consideration. Let's talk indices. The German DAX, the unstoppable market that everyone's trying to short. Would I short it? Probably not. I have not seen any weakness here on this market other than it came up and obviously rejected this level. That doesn't mean it's over yet. We've seen that on Bitcoin recently. These are melt up markets. We got that coil, we broke out, and it was a big break. Look at how it's gone. So this kind of reminds me of the S&P 500. The break could be significant, and I think that's going to be an important one. Russell 2000, big rejection week, but no follow through on that one yet. So look, we remain optimistic on the Russell at this point. And here is what's changed over the Qs. So, of course, in the previous session, we had the rally to the gap and then the sell. It was actually a great trade. Then we came down to the level of the lows in the futures and we saw a rally up. Now we have a gap to the downside, which is sitting at 384.82. And we also have an S&P gap as well. So we're still coiled and we still don't have any direction, which is, I guess you would say, a traditional December. Not the one that we were looking at, which is, of course, a positive 10% year, but it is a traditional December. This is the NASDAQ. You can see the level. The S&P probably had even the better trade on it. And we know around the 16,000 level has been where we've seen resistance. If we saw a spike and then it came straight back down, I'd actually be starting to get pretty bearish on this market because that would show us that we might have that UT or Wyckoff's final last push to really liquidate people. But I do think there's going to be a trap in this NASDAQ and we're going to have to find it and be patient on it. So for now, it's just buy and sell in the rotation range. Here's the S&P 500. You can see the gap, 45.49. We've got like this little high here. We're still theoretically bullish across the board on the S&P in comparison to the NAS, which did have some weakness in it. The NASDAQ's certainly the main weak market here. And you can see it just keeps going up and down and all around. Let's have a look at the futures market. This was our green squiggly line. Now, we're going to get a new green squiggly line, thanks to the non-farm payrolls, which we'll set up for the weekend video. But yeah, it's just up, down, and all around. There was actually a good little scalp if you'd looked at this low and it breached higher. That could have been something you looked at if you were trading within the range. I was looking for a new break low, which obviously we're looking at 45.20. And just remember, when you look at the options, there's literally a ton of options sitting here and a ton of options sitting at 4,600 and then a ton of options at 4,630. So that's why we're coiled. It's just so profitable to sit here while people are making bullish and bearish bets on options. They expire them, then they start to push out. Jobs numbers or big economic events is what allows these markets to push out of these ranges. So again, we're looking for it. And what's going on with Bitcoin? Well, from a very short-term perspective, you do start to have weakness here for the first time. This was an okay short off 44K. I think on the high time frames, you've really got not much to be concerned about. You don't have that 46 to 48,000 just yet. We're looking for that ideally. It's been a great run on Bitcoin, but we also don't have that huge sell-off that usually happens before everything kind of turns. So at this stage, the trend's still up. Very small time frame trend trades might be in. But look, non-farm payrolls is one of the weirdest times in the market during the month. It's probably the number one time I tend not to look at markets and trade them. And the main reason is because we all know that the market loves to go one direction and then the opposite direction during these kind of events. It can very easily do so because of the nature of the revisions in it as well. So what's going on? Well, this is the expectation in terms of what we're expecting from the jobs numbers. The thing is, it's not just even this number, it's also the revisions of the previous two numbers. I mean, it's such a joke. They revised the other numbers like 60,000, 50,000. I mean, what are they even doing? But that's why the market freaks out and it tends to move quite a lot. Do remember, patience and reaction is generally the better way to think about this particular market, but you've got to have a game plan. You've got to be playing chess with it and not checkers, yeah? And what we want to be doing is really sometimes revisiting it after the weekend close, after that point, and then revisiting what the big move could be next. Thanks very much for watching. If you're interested in finding out more about our post opinion on the non-farm payrolls, make sure to sign up for VIP free weekly newsletter. We'll be going through thousands of charts and sifting through them to find 5 of the biggest ones that will really reflect what's happening in December into 2024 from a chart perspective. Thanks so much. We'll see you in the next one. Subscribe, smash the alert button. Bye for now.